All right, well, welcome to the stock market review for June 26, 2024. Hope everybody is doing great out there. All right, so we're going to take a look at the real estate market. We're going to take a look at the stock market today. I'm going to go over Bitcoin. We've had some pretty big changes in Bitcoin over the last week, so I do want to address that. Before I do, let's just go ahead and go through some of the administrational items. I'm going to start, of course, with the risk control first. So let me go full screen, and then we'll go ahead and get going here. All right, so we like you to be aware of the risks in trading. Like all forms of financial investment and trading, we deal in a realm of probabilities, not certainties. So there's times when the setup is perfect from a probability standpoint, but the trade does not work out and the investment does not work out. So you have to use risk control in times like that. And I've written a few books on that I think would help most traders out there, and whether you're a day trader, position trader, regardless of the market. So risk control is very important. Also, too, always trade with money you can afford to risk, called risk capital. That's equally as important. And then also to be sure to contact your financial advisor or whoever manages your money to be before actually acting on any of the suggestions that we give you here, just to be sure they're suitable for you. So those are the things you want to take forward. All right, now, in terms of risk, if you're into day trading, the futures market, there are many prop firms out there. The one we like the best so far is Apex. All right, that's been the one that's been around the longest, and their prices are extremely good, which is another great thing. Also, too, when you sign up, you get basically a simulated account or an evaluation account at first. And then with that, though, you get free data, and it's very inexpensive. And I got a code. I guess I'll put that up in the chat area here. I'll put a link and a code. So if you're interested in this type of thing, you can sign up, use our code, and get a discount on the monthly subscription fee. And so you start out with this quote-unquote evaluation account or simulated account. And then once you pass the guidelines of Apex, using, of course, risk control and meeting certain goals and objectives. Once you do that, you've proven to them that you are a good day trader, and then they fund your account and you can actually start earning money. So it's a great way to go if you're into that. And even if you're not into that, it's still a great way to get some free data while you're learning. And also, too, you can also practice your longer term trading in the futures market on that as well. So just to give you a couple ideas to think about, it is day trading only for now. So they do reset your account at the end of the night in terms of any positions they'll take off. So you have to go into each day with fresh positions. But it's a really fantastic way to dip your toe into financial futures, especially day trading, without risking any money, so to speak. All right, now, books on risk control. I want to highlight Money Management for Traders and a Trader's Money Management System. So I think that's two great books if you need help in that area. My new book, The Art of Trading on the Far Right, second edition, is completed, so that'll be out this year. It'll be about 500 pages, and I think that's going to be the best book I've written to date. And I have a book on Elliott Wave as well. All right, let's jump in to what's going on here in the markets. All right, so Wednesday, today is June 26th. We got NBA mortgage apps. We got new home sales. We got EIA petroleum status report. I think those are all out already. And then on Thursday, we've got durable goods, GDP, international trade and goods, jobless claims, pending home sales, EIA natural gas report, Fed balance sheet, no FOMC. All right, Friday, June 28th, as we end the week, we have personal income and outlay, Chicago PMI, consumer sentiment, Baker Hughes rig count, and farm prices. Nothing really there I think is going to surprise anybody. I think home sales the transactional business is pretty lacking there, but prices have remained high. And we're going to talk more about that as well. All right, so as you all know, basically the Fed came out a couple of weeks ago and basically said probably one rate cut this year. I think it's coming in September. I think they'll do it right before the election period. Well, anyway, September-ish, let's just say that. But I think probably the idea is to try to keep the markets as stable as possible going into the presidential election. The 30-year fix currently right now is at 6.92%. down a little bit from last week. So a little bit of softening in the mortgage industry, but still up there. 15-year fixed is 6.35, ARMs are at 6.59, and the 30-year fixed jumbo is at 7.02. Now, historically, if you go back quite a ways, when I was much younger, these would be normal interest rates, okay? These would not be anything unusual back then. The problem is everybody got so used to just about zero interest rates that this is a shocker, all right? So you combine higher interest rates than people are used to, along with the fact that we also have incredibly high housing prices. And that the high housing prices are really what are making things unaffordable, I think more so than the interest rates. Not helping, of course, the interest rates, but housing is just so expensive now. All right, mortgage applications are down. This was as of May 29th. Will the home buyers return in the summer of 2024? Not really. Okay, they haven't. The low demand in mortgages, the worst since 1995. All right, so that was just coming off a recession in real estate as well back then. So tough time to be a mortgage broker. If any of you guys are out there, my heart goes out to you because it is a tough business right now. Not many people are refinancing, and not many people are buying new homes. Now, there is some scuttlebutt out there that the Fed's going to start introducing HELOC loans at cheaper interest rates. So that may help spur people to tap some of the equity in these homes and pay off their high interest rates. Of course, it's a double-edged sword. You do that, and then, of course, now you have a new mortgage on your home that you have to worry about. So go lightly on that. Be careful. All right, so that's kind of the deal with rates here, and yet at the same time, home prices hit a record high again out in the Wall Street journals. So in May, the prices came up quite a bit throughout the country. There is some softening in certain areas, so it's when I talk like this, it's mostly about a national average, and certainly for California. But there are pockets where home prices have come down in Texas, for example, and also in Florida. So that is a very local business, depending on where you are. You're going to have to take the assessment off that, okay? All right, so now Case-Shiller index versus the CPI. All right, so the Case-Shiller is in red, and we go over this every week, but I'll just recap it real quick here. This is the CPI down here. So the Case-Shiller is measuring home prices, the average home prices in the United States. CPI is, of course, an inflation measure. Doesn't include everything, but they use it as well to give you an eye on how housing is doing in relation to the CPI. Now, this goes back 50 years. You can see Case-Shiller red line index has always been above the CPI, which makes, of course, real estate a good investment. There's times when it gets bubbled, like during the financial crisis. And then after the bubble cracks, we come down to a more normal level, and home buying once again begins. And then here we are currently bubbled as well, current day. Now, I've gone over the reasons before why these bubbles happen, why they come back. The financial crisis was its own unique bubble. They're always unique. And one of the sayings that you always hear during a bubble, I don't care what it is, it could be the dot-com bubble back in 2000. The classic quote is, times are always different now. It's different now. And as soon as people get used to that, of course, that's when things fall apart. So I'm pretty sure that the real estate market, along probably with the stock market at some point before the end of the year, early into 2025, should start to take on some water and crack, so to speak. So I'm anticipating that the drop's going to be quite huge in this. I would say 40%, maybe 50% housing break. Now, you can see where the CPI actually adjusted up for the inflation over the last 3 or 4 years, and housing prices, though, have too. Okay, so you've got the same distance really between the Case-Shiller and the CPI as you had for quite some time here. So it keeps widening, or at least staying the same. So one of two results you're going to have here. You're either going to have hyperinflation, and this is going to move up and get closer that way. But if that occurs, housing will probably continue to go up. So I think the only result from this will be some type of bubble burst in the housing market. Never know exactly when. All right. So, but that's the thing about bubbles. They can last a long time. The financial crisis, we were in it for about a year and a half before it busted. And we could certainly remain here for quite some time going forward until it busts. But I think we're getting close to some real major tops in just about all the assets, including stocks. And so I think probably when things start to burst, they'll start to burst pretty quickly. So just keep that in mind going forward. We all need a place to live. So real estate, you always need some form of real estate, but these prices are really high. All right. Realtor.com released some inventory data for May, and inventory is increasing, which you can see on this graph here. You can see the prices upticking here for May of 2024. So inventory has definitely improved a lot. The problem is demand hasn't. And so transactional business is still very low, which again is why the mortgage industry is hurting as well. In California, very unique situation there. You've got basically, $1 million plus homes. I think the starter home is getting close to $1 million, which is a joke. So you've got the inventory increasing slightly, but nowhere near what it needs to be to make the supply high enough to decrease prices in real estate. It's all about supply and demand. All right. So basically, what this screen is really saying here is that 20 to 30% before prices drop meaningfully. In other words, they need another 20 to 30% more of inventory listings before they have enough inventory for prices to be coming down. So right now, until that happens, it's still kind of a seller's market, so to speak, if you can find any buyers. All right, we're going to jump into the charts now and go over what the markets are actually doing here. And so we're going to be using our software. So I put the screen up because a lot of times you'll see my charts and you'll say, what's that on there? What's that on there? Well, it's our software, and you can get this. I'll put the links for more information on this, but you can learn more about it on our website. All right, so here's the Dow Jones Industrial Average. All right, so it's kicking the can right near the Elliott Wave 5 target zone up here. So in Elliott Wave, basically, it's a form of technical analysis that takes into account mass psychology. And basically, there are 5 waves of this mass psychology in a trend. At the end of the 5th wave, the trend is over and the market reverses and goes in the opposite direction. So we're in a bull market and have been really since 2009, a significant one. So these target zones that I've drawn on here go all the way back to those time periods. So this is a fairly significant top here. And the top is between 40,238 up to 47,360. So we could get another surge and go much higher in the market, but we're pretty close to a top here. And, we seem to be bouncing along here, not really making too many gains and too many losses. So we're kind of in this channeling area, and you can see that on the chart. Great thing about charts is they never lie, right? What you see is what you see. So there's the channel. Now, we could get a breakout to the upside here. It certainly seems like some of the fractal natures of the pyramids here are being broken to the upside, which indicates some bullishness coming in. But we need to take out this previous high that was right near the target zone before we see a jump into the target zone, so to speak, with any significance. So we'll see what happens with that. I've got some support levels I thought I'd put down here. This is a minor support level, but significant at 37,611.55. If we go below that, then the chances of reaching or going back into the target zone or close to it is pretty nil. If we go below the major support down here, then the chances that the bear market has begun, multi-year bear market has begun, is high. Okay, so that's kind of why they're there. Now, we could also probably next week put a little support level in here to kind of give us an idea if we're going to hold these levels or not. So I'll work on that for next week and refresh that. But 15% of the time, the market gets to where it is now. So in other words, the top finishes where it is now. 70% of the time, the top finishes in between the two blue lines, and 15% of the time, it goes higher. So we're in that 15% area. And again, the higher probability is for the markets to eventually wiggle its way up into the wave 5 target zone. And I don't doubt that. I think that probably will happen, especially if they lower interest rates here a little bit. So we'll see what happens. But you know, we've got a summer. Anything can cause a market to end abruptly in terms of a top. A bull market can end abruptly. A bear market can end abruptly. So if something, world event or economic event comes along and causes these support levels to be broken with bad news of any type, then that's probably it. We're heading down. But and you know, statistically, we're still holding these levels. We haven't reached the target zone, so the probabilities are still there for it to reach into that area. All right, on the 60-minute chart, we came up to this area here. All right, we had a little support here, and now it's you know, now we got a green PTF. So now we're making the case for maybe this is the pullback bottom here, and we're heading back up. So that's kind of what we're thinking. On the NASDAQ here, basically we're not near the target zone as close as we are on the Dow. So this leads me to believe that we're going higher in the NASDAQ, which probably will drive, of course, all the markets up because the NASDAQ is so powerful with its big boys like NVIDIA. You know, you got Microsoft, you got all of these guys in there. So those are that's going to bring those values, the entire indexes, all the indexes pretty much to the upside. All right. So this is another case that we're probably going to go higher in the markets before selling off. Now, S&P 500, similar thing, which is kind of interesting. I would have expected this to be a little bit closer to the target like the Dow, but it's pretty much like the NASDAQ in terms of distance away from the target. So we're kind of still working its way up there to a 5.655 level, possibly all the way to the 60.89. So keep that in mind. All right, so I still see some more upside to the market, but we're close enough to tops right now that anything could happen. So use your stops on any long positions. I would also, too, recommend for your investment portfolios to meet with your financial advisor. Go over a game plan in case the market reverses. So you have, you're ready for that and prepared. You can do a lot of hedging techniques. You can do inverse ETFs. You can simply sell if you're in an IRA, not worry about the tax implications. But you need to talk to them about that because if you sell any stocks, you will have tax implications if they're not in an IRA. So definitely see what your game plan is and see what works best for you personally. All right, we're going to look at some live charts. Before I do, if you wouldn't mind just taking a minute and giving us a like out there, okay, that helps the channel. All right, so let's go ahead and take a look first here at Bitcoin. We got about another 10 minutes together, and I want to spend a little time looking at Bitcoin and taking a look at the latest on the Dow, and then take a look at some of our more popular ones like silver. Now, if you have any individual stocks you want me to look up, feel free to come on Friday to Stock Analysis Friday. We're there, and that's the purpose of that is for me to go over any maybe of your holdings, or if you're thinking about trading something, I'll be glad to give you my analysis based on my experience in using the software. All right, so Bitcoin has definitely broken down, especially in the last week. It started about 2 weeks ago, but it started now to get down to some levels that are very concerning. All right, we've got a couple things that changed with the software. Now we've got a red PTF on these two short-term time frames. So the daily and the actual 60-minute. So the probabilities of us going down again, because we popped up a little bit here, are quite high. All right, so keep that in mind. Long-term, the long-term charts are still bullish. All right, so basically we're in a correction in a bull, overall long-term bull market in Bitcoin. That has not changed. But what has changed is we probably do not have a bottom here based on what these indicators are telling me. And that means here's our high probability target retracement. So this would be a wave 4, and that's between 55,271 now down to 43,694. Okay, so that's pretty dramatic. You can always get back in, so I'm going to leave that up to you as how you want to work that. If you're long-term and you don't care about it coming down possibly, what, another $20,000 there on the coins, then just hold it and don't worry about it. Otherwise, you may want to rethink holding a long position here if you're a shorter-term trader and wait for it to come down and get back in. Again, I'm going to leave that up to you. If you want to hold it and use this as another buying opportunity, if it gets into that target zone, that's another possibility. So a lot of different ways you could approach this, but as long as the long-term charts are bullish, all right, it should resolve itself after this correction finishes to the upside. Now, what's interesting here, this would make this a wave 3. This we thought was an ABC, and it still could be, because so far this bottom has not broken. So that's where that red line is. So if that holds, we may just get a short-term swing and then back up. The other alternative is that this is an A here. This was a B here, because we didn't go above this here. And now this could be a C. And it could go into a more complex correction as well. So that, again, this is your high probability wave 4 Fibonacci target zone. 70% probability. We're in the 15% probability area now for a wave 4 ending where it is. So that 70% has to be kind of thought about and respected, because that's the higher probability pullback. What's interesting with Bitcoin is, you know, you can look at a lot of, and there's a lot of smart people out there that know a lot more about the halvings and everything else than I do. I'm a chart guy, okay? I just look at the chart. But, you know, it's amazing, because no matter what the math comes out to be, you cannot mistake this for a wave 3, okay? You cannot mistake this for a correction in a wave 3. So by the end of the day, no matter how much math, no matter how much is put into that, you know, cycling and all that kind of stuff, we're still dealing with the fact the Elliott Wave measured math psychology. This was the enthusiastic move up. Now we're in the profit-taking correction, and then we should start moving up with less enthusiasm later on, but breaking that high. So, you know, it's amazing how the charts, no matter what the instrument, seem to fall in place with the Elliott Wave. All right, so that's Bitcoin. Let's quickly take a look at, and GBTC. Let me just run over to that. GBTC is no different. Okay, that's doing its same thing. Got a red PTF here. All right, so again, wave 3. So same, that's going to follow pretty much Bitcoin. Not exactly, of course, but pretty darn close, okay? Let's take a look at the Dow. Let me see if I can find where I have that. There we go. Okay, so on the Dow, give that a second to load here. All right. Okay, so I got one funky little price bar there. All right, so slow and loading for some reason. Let's see what we got. Connections, got my Apex accounts. Should load here. I don't know why it's not loading so good, but all right. So, oh, I do. Okay, wait 1 second. I redid these charts and it shall load. Okay. All right. So basically, you know, we're kind of, like I said, still in this channel. All right. We got a green PTF over here. So I think probably we're going to resolve and get into more highs here. I wouldn't be surprised if this trickles into this upper target zone here on this weekly chart here pretty soon. All right, I would think it would get up there. Got one bad tick over there. But I would think we'd get into this target zone up here. Here's the target, wave 5 right here. All right, so I would think we're probably going to get up in there sometime pretty soon, possibly over the next couple of weeks or even the summer, maybe topping out somewhere around middle of July, hard to say, okay? But I think it's probably heading up in there. It looks like it's getting pretty bullish again, okay? So we'll see how that goes and take a look at it. On silver, you know, we had a buy on that. It is correcting now. So, you know, broke out of this pennant on the far right-hand side, the weekly chart there. And that was a nice move to the upside. Again, a little pullback here now. We're in a correction. We've got a short-term target here. You can see amazingly how these Fibonacci and Elliott Wave targets get hit. So this is a a 5 top here, which would be a 3 top here. And now we're going into a major 4. We got a red owl down there. So we're coming down into a major 4 now. So that's kind of where we are on silver. And then after that, we should resolve itself back to the upside. So that's silver. Gold. I got to tell you, gold is an interesting one because, you know, a lot of people, you know, if the market sells off gold, people are going to be going into gold, et cetera, et cetera. I see it, you know, right now, it looks to me like this high here, all right, this is an owl high at 25, looks like 25.32. We had a high back here at 24. So we're in the wave 3 still, probably in wave 5 of wave 3. And so after we get to a top here, we should see a correction in gold. All right, so I think probably, again, gold topping here, probably a little higher on this, and then when then probably coming on down at some point, okay? So keep that in mind. All right, now TLT, the bonds. All right, this is another one I get asked a lot about. And on TLT, don't think we quite have a bottom in, but I think we're moving up into a zone here of around 110 to 127 as a bullish top. And I think after that, we could see some more selling. We're going to keep an eye on the PTF on this weekly chart to see. But I think probably realistically, we got a possible trade up to this area. So if you're long TLT, I would stay long for right now and shoot that for your target, but I wouldn't do it necessarily as an investment right now. So maybe if the market sells off, we'll get up there at some point and then take a reassess it, because bonds should do pretty good, I think, on a market sell-off. All right, USO. All right, this is one where we are expecting a target to be reached of around 99 to 124. This is the ETF for crude oil, which will mean higher prices at the gas pump. We've got a pennant forming on the far right-hand chart. So we're, you know, see if we break out of that, but it's kind of been drifting sideways, but we think probably this is a bottom here and we'll drift on up. So bullish on USO until it gets to that target zone. All right, so that is that one. Let's see, UNG. All right, I do like to cover that one before we depart here. And UNG here, okay, is the ETF for natural gas. And we like it, all right? We like it for a long trade, okay? It's pulling back right now, but we think that this is a bottom, significant bottom down here. So our target is 46 bucks roughly to 66, and we're at, what, 18 and a half. So it looks to me like that's a great risk to reward. I think probably on the 60-minute chart, which is our far left-hand side chart here, we have a situation where it's coming down. I don't think I would be, if you're not in it already, in other words, if you didn't get in way down here, I would wait on getting in here and let's see how far down it comes in, and possibly you can get in at a better price. So we'll take a look at this next week if you want to come next week to see if the entry makes better sense then than it does now, okay? So I'd hold off a little bit on that for a while, okay? So that's kind of where I am on that. Trying to think of anything else. Let's take a look at CPT, which is the ETF in the residential housing market. All right, so this actually is looking fairly bullish short term right now. We're moving up. We have a fib target zone that I'm going to draw in for you based on fibs. And I'm kind of looking at approximately 120 to 141. Which probably is going to correspond to a few things. So a few things could be, we could have an interest rate cut in September, and that may make people a little bit happier about trying to get into a house. We do have some housing coming down in certain areas like Texas and Florida, so maybe that will help things spur along. But in any case, it looks to me, for whatever reason, it is moving up, and it could be just seasonal. Okay, it could be a little bit of a seasonal situation with inventories increasing, and again, transactional business is so slow, though it's not so great. But in any case, there it is. Now, what's interesting on this is we have a red PTF on the far right-hand chart, which is our weekly chart, indicating that as long as that's red, there's a 75% probability that this bottom is not the bottom. So prices will return and go lower. So what we may be seeing is a little bullishness seasonal that could end in this zone, and then it heads back down. So just keep that in mind, okay? So I think maybe the housing rise and CPT is temporarily at this time. All right, so that's it for today. I want to thank everybody for coming. Appreciate it. And we will see you back here, of course, next week. And thank you, and have a great week. And give us a like before you go. And we'll see you at the client support in about half an hour for all our clients. All right, so take care, and thanks so much. I'll put a little music on, and then we'll go ahead and shut her down.